Hi, everybody. Welcome back to Ox Talks. It is Tuesday, May 14th, 2024. Thank you all for joining the show today. I appreciate each and every one of you building this community. Please subscribe to the channel, like, and most importantly, share the videos as far and wide with as many people as you possibly can so we can continue to wake people up and share this information. I'm going to cover a couple stories today that if you just take at face value the mainstream media's spin on certain data points, a lot of people, I think, miss the reality or the let's say the underbelly or the real story behind what is happening. So I try to do my best as a lay person to come out here and share some things with you, several times a week. So thank you very much. I know you have a lot of choices you can be tuning into on YouTube, but otherwise, let's continue to build the community. Let me jump right into what I saw today that I think are some important issues to discuss. And I'm doing a little earlier show today because I have to leave the office for a couple meetings, and my Tuesday workout is a bit earlier than usual, so that's why it's going up early. Hopefully all of you guys can catch this when you get home from work today or what have you. Hope you're having a productive day, productive week so far. So let's jump into it. The first story I saw this morning, first thing when I woke up, it has to do with a chain of restaurants, or a restaurant chain known as the Red Lobster. Comment below. I don't know if you guys have those in your area, in your town, in your state. We do have them here in Southern California. We actually have a Red Lobster just down maybe within a mile or two of my office here. I'm not a huge fan of that layout. I mean, I have eaten there before. That's the home of people going in there and powering down 15 plates of fried shrimp for $10 or something like that. Last time I was there, I don't think really, it's been several years, but I wasn't really impressed with the quality, but I do recall being in there and it was jam-packed. Families packed into tables. Everyone was enjoying life and ordering up endless buckets of shrimp. So let's talk about this story out of Zero Hedge today. Red Lobster abruptly closes dozens of locations. It says loses its key supplier and begins fire selling kitchen equipment. The article says reports are surfacing this week that dozens of its locations across the country are unexpectedly closing down. Once again, unexpectedly. More than 80 locations in at least 27 states have now been listed as temporarily closed on the restaurant chain's website, according to CBS affiliate WBNS. I will say that CNBC came out with a story a little bit later on today, and according to CNBC, Red Lobster is shuttering about 99 locations as opposed to 80. And they're saying that's about 15% of all of its stores that it has across this country, which is about 600 locations in the U.S. It says the report said the workers at the locations were offered no notice whatsoever as to the closings. The Orlando-based seafood chain, known for its endless shrimp deals, has been struggling with significant internal and financial challenges, the report says. This restaurant is, I would say, it's a middle-class place. I mean, if you've been there, let me know what you think. It's not, what I consider high-end, but it's also not bottom-of-the-barrel stuff. So this is, I would consider a middle-class establishment, and they are not making it. What does that tell you about the consumers? What does that tell you about people's ability to continue to eat out and spend money? The article continues, recently the company faced rumors of bankruptcy as it sought a buyer to avoid filing for Chapter 11, with multiple media outlets reporting the potential filing last month. By the way, locations are going to be closing in Denver, Colorado, Indianapolis, Rochester, New York, Sacramento, California, San Antonio, Texas, and it says San Diego, California. So if you hear of any other locations in your area that are going to be closing as well, or you've seen a temporarily closed sign on any of those restaurants in your locations, please share. The article goes on and says liquidation. A liquidation company has started an online auction for the kitchen equipment and other contents from the closed Red Lobster locations. So they've already started to liquidate all of the furniture, all of the equipment they have. Again, this was done with no notice, it says, to its employees. Look, guys, we've discussed this before. Employees are always the last to know. They probably didn't wake up this morning or yesterday and believe that they were going to be told, sorry, don't come into work today. Your location has been closed down. So amid these developments, the company has not publicly commented on the recent closures of several locations, nor responded to inquiries about them. So I guess one of their key suppliers pulled out as well and has refused to supply food to them. But look at how many people's lives are affected, impacted by this. You don't just have the employees that staff the restaurants, the waiters, waitresses, servers, bus people, cooks, all that. You also have the suppliers. You have shareholders that potentially can be impacted when these businesses fail. I believe Red Lobster is owned by a larger conglomerate, but there are impacts felt that are measurable. So I hope that none of you were employed at this company, or say one of the locations is closing in this company. But it's just one more reason why we have to pay really good attention to what's happening with closures, job losses, shuttering of businesses across this country, and it continues to get worse. The next article I want to share with you today, I touched briefly on it yesterday in the show. I indicated that Home Depot was going to be coming out this morning with its earnings, and the earnings report is out. I chose to pull the CNBC article to share with you because I want to expose what I was discussing a couple of minutes ago about the spin that the mainstream media and even the corporate officers from the highest levels spin, because look, they want to keep their stock price high. CNBC obviously wants people to be tuning in and cheerleading for stocks. So the spin is unbelievable, and that was the title I put in the video. I call bullshit on this explanation I'm going to read to you in a second for why their revenues fell. Let me jump into it. Home Depot on Tuesday posted quarterly revenue below Wall Street expectations as shoppers postponed bigger discretionary projects like bath and kitchen remodels because of higher interest rates and made spring purchases late. That's their explanation. In an interview with CNBC, Chief Financial Officer Richard McPhail said consumers are in a waiting game that began in the second half of last year as they responded to mortgage rates climbing. He said the company anticipated those trends would continue. Quote, the home improvement customer, listen to this guy. Who is this guy again? Richard McPhail. Okay. He says the home improvement customer is extremely healthy from a financial perspective, end quote, he said. And so it's not the case of not having the ability to spend. What they tell us is they're just simply deferring these projects as given higher interest rates, it just doesn't seem the right moment to execute. So I have a couple of questions for all of you. Weigh in, give me your comments. Number one, why would interest rates matter unless these extremely strong extremely healthy consumers were purchasing these items for their home improvement projects with cash or with a check? They're putting on credit cards. Number two, why are these extremely healthy consumers putting these projects on credit cards to begin with? And we all know the answer. They're using credit. They don't have the ability to buy and to purchase the equipment and the materials for the projects unless they use credit cards. And again, you would ask yourself, okay, if they're using credit cards and paying them off right away, once again, why would interest rates be the explanation or the catalyst for them not going ahead with these projects? It's because they can't afford to pay off the credit cards every month when they run them up. So let me know if you believe the explanation from Home Depot's CFO, Chief Financial Officer. So that's what's going on. Comparable sales dropped 2.8% in the fiscal first quarter across the business and declined 3.2% in the United States. Home Depot is contending with a tougher housing backdrop, which has dampened demand for do-it-yourself projects. About half of Home Depot's sales come from do-it-yourself customers. The other half come from roofers, landscapers, professionals, things like that. So it says, listen to this, as interest rates remain high, consumers have been reluctant to move out of their homes and into new ones. The kind of turnover that often inspires home projects. Again, another question I have for all of you that popped into my mind when I read that just a few minutes ago. Why would this not cause people, those that are waiting, that aren't leaving their properties, aren't selling, why would that not be the incentive or cause people to actually decide to complete those projects for a house that they've decided to remain in? It doesn't make any sense. So there's your Home Depot input. And again, I hate to be such a cynic, but I read this stuff and sometimes it drives me nuts. I don't always share my views, or my breakdown. I'm going to start doing that more because I think it'll generate more conversation. You all don't have to agree with me. Maybe you think my take on this is wrong. I welcome all comments, whether they're in agreement with me or not. So let's go on to the last story I saw today, or the last data that was released this morning, and we just, again, briefly talked about it on yesterday's show, the PPI, Producer Price Index. That's another measure or gauge of inflation that the Fed watches. PPI was released today, and once again, wholesale prices jumped more than expected in April, putting up another potential roadblock to interest rate cuts anytime soon. It says the Producer Price Index, a gauge of prices received at the wholesale level, increased 0.5% for the month, higher than the 0.3% Dow Jones estimate the Labor Department's Bureau of Labor Statistics reported Tuesday. However, the March reading was revised from initially reported 0.2 gain to a decline of 0.1%. And again, because last month's numbers were revised downward, the markets decided to use this as the silver lining to rally again today. It says, stripping out volatile food and energy prices, the core PPI also rose 0.5% compared with the 0.2% Dow Jones estimate. Excluding trade services from that core group showed a 0.4% increase on the month and 3.1% on a 12-month basis. Listen to this, the highest level since April 2023. So we have to go back, again, more than a year to find when the prices were rising at this rapid of a pace. On a year-over-year basis, wholesale inflation rose 2.2%, also the highest in a year. The core PPI inflation was at 2.4%, the biggest annual move since August of 2023. Both numbers, it says, were in line with estimates from Reuters. And there's a quote here that says, sticky inflation looked downright stuck this morning after a much hotter than expected inflation reading. But with last month's numbers revised lower, this report may not have been as much of an upside shock as it first appeared to be, said Chris Larkin, Managing Director of Trading and Investing for E-Trade from Morgan Stanley. Again, another spin. Services prices boosted the wholesale inflation reading, rising 0.6% and accounting for about 3/4 of the headline gain, while the final demand goods index increased 0.4. The services increase was the biggest monthly gain since July of 2023. And then they quoted Powell right away saying, despite the seemingly hotter inflation reading, he says he called the report actually quite mixed. I will tell you this, later on, a couple hours later, they came out with more comments from Powell, and he basically, here's what he says. He said, inflation has been higher than thought, and he expects the rates to hold steady. So all the comments after that initial reading or report were that they don't see any reason why they would adjust rates, certainly backward. Markets didn't seem to care today. They still rallied. Gold and silver did put on a nice gain today, picked up some of what they gave back yesterday. That was interesting to see because, again, a higher inflation number would lead the rational person to conclude that there will not be a rate cut, and usually that puts pressure on the metals, and usually it also causes the dollar to strengthen. And this today, the dollar weakened a bit, and the metals caught some steam. So again, we're living in a clown world. Nothing makes sense. It's all upside down. A little more cynical than normal today, guys, but thought I would call it how it is. Hope you enjoyed the content. I'll be leaving to get a workout here in a bit, and I hope all of you do the same today. Get your workouts in, get your steps in, do some strength training, push-ups, sit-ups, all those things we talk about on a regular basis on the channel. Watch the diet. That's a key component. You can't have a crummy diet and a good workout schedule, or vice versa. You need to have both. So work on that. Hope you guys have a great rest of your day and evening today. And I should see most of you tomorrow, if not later in the week. Have a good night. Bye.